Oracle doesn't have headlines like Nvidia. It doesn't have the hype of OpenAI or the cult following of Tesla. But while everyone's been watching the shiny things, Oracle quietly became the backbone of the AI economy, and the market's starting to notice. Nvidia's up 200% this year, Palantir's become a meme stock with government contracts, Microsoft won't shut up about Copilot. And Oracle, the company everyone wrote off as a relic from the database era, up 80% and still trading like it's 2015. Which means either the market's completely wrong about Oracle, or it's about to remember why boring infrastructure companies always win when everyone else is too busy performing for TikTok. Here's what nobody tells you about AI. The exciting part, the chat bots, the image generators, the apocalypse predictions, runs on the most boring infrastructure imaginable. Databases, cloud servers, enterprise software that sounds like it was named by a committee in 1987. Oracle builds that stuff, and it turns out when you're training AI models that consume more electricity than small countries, you need servers that don't explode. Oracle's cloud infrastructure revenue grew 42% year over year. That's faster than Amazon Web Services. That's double Google Cloud's growth rate. Which, of course, is exactly what you'd expect from a company most people think sells outdated databases. Here's the thing about AI training. It's absurdly expensive. Training GPT-4 cost an estimated $100 million. Google's Gemini? Probably more. And that's just the training run, not the infrastructure you need to keep it running after launch. Everyone wants to build the next ChatGPT. Nobody wants to talk about the electric bill. Or the fact that AI models need storage systems that can handle petabytes of data moving at speeds that would make your Wi-Fi router weep. That's where Oracle comes in. They're not building the AI, they're building the place where AI gets built, and charging rent by the terabyte. AWS and Azure have scale, sure, but Oracle has something better, infrastructure margins of 70%. That means for every dollar of a company like OpenAI or xAI spends on Oracle's cloud, Oracle keeps 70 cents. Compare that to AWS at 30% margins, or Google Cloud, which only just became profitable last year. Turns out, when you build infrastructure specifically for AI workloads instead of trying to be everything to everyone, you can actually charge premium prices. And companies pay it. Larry Ellison, Oracle's founder and professional yacht collector, spent the 2010s watching AWS eat his lunch. From 2010 to 2018, Oracle's cloud strategy was basically build a worse version of AWS, charge more for it, and yell at customers until they signed contracts. It did not go well. AWS grew to $8 billion in revenue. Oracle's cloud business was a rounding error. Wall Street wrote them off. Tech blogs published obituaries with headlines like, "Is Oracle the next IBM?" Except Ellison didn't die. He got mad, and then he did something actually smart. He stopped trying to compete with AWS on everything and started building infrastructure for one thing: AI. And it worked. OpenAI uses Oracle's cloud for inference workloads. Nvidia, the company printing money faster than the Fed, partners with Oracle on AI supercomputing clusters. Even Elon Musk's xAI signed a $10 billion deal with Oracle to build out Grok's infrastructure. That's not a pivot, that's a resurrection. And here's the kicker. Ellison's ego probably saved the company, because most CEOs would have given up after getting destroyed by AWS for a decade. But Ellison's the guy who spent $100 million on a yacht just to make it bigger than his rival's yacht. Losing to Jeff Bezos wasn't an option. It was a personal insult. So he built a cloud business out of spite, and now it's worth $200 billion. Never bet against someone rich enough to turn pettiness into a business strategy. Most AI stocks are priced like they've already conquered the universe. Nvidia trades at 40x earnings, Palantir's at 150x revenue, which is not a real valuation. That's a religious experience. Oracle, 25x earnings. Profitable, actual revenue. Contracts that don't depend on vibes. Their cloud infrastructure margin is 70%. That's not a typo. They're selling pickaxes during a gold rush, and the pickaxes cost almost nothing to replicate once the factory's running. Meanwhile, Oracle's been buying back stock like it's 2008 and everything's on sale. $10 billion in buybacks this year alone. So let me get this straight. They're growing faster than competitors, printing cash, and shrinking the share count? Yeah, that's how stocks go up. But wait, there's more. Because Wall Street suddenly remembered what fundamentals are. Oracle's got a $99 billion backlog of contracted cloud revenue. That's not projected. That's already sold. Companies signed multi-year deals, which means Oracle knows exactly how much cash is coming in through 2027. Here's the part nobody talks about. Oracle's legacy business isn't a liability anymore. It's a weapon. Every major bank, insurance company, and government agency runs on Oracle databases. You can't just switch to AWS when your entire financial system is built on Oracle architecture. They don't have to compete for the deal. And it gets better. Or worse, depending on how you feel about monopolies. Oracle's database becomes an advantage in the AI era, because AI models need clean, structured, massive datasets. And Oracle's been managing those datasets since before Google existed. AWS can offer you cheaper cloud storage, but if your data is in Oracle, and your AI training needs Oracle's database architecture, suddenly cheaper doesn't matter. You're paying the Oracle tax. You always were. Now it just funds AI infrastructure too. Here's the catch, because there's always a catch. Oracle's still Oracle. The company famous for sales tactics that make used car dealerships look ethical. The company that charges you for database licenses like they're holding your firstborn hostage. Their enterprise software is sticky, sure, but sticky is just another word for customers hate us, but switching costs more than therapy. And yeah, they're winning AI infrastructure deals now, but Amazon has $90 billion in cloud revenue, Microsoft has $110 billion, Oracle has $20 billion. They're growing fast because they started small. That's not the same as winning. Plus, the AI bubble is real. If we hit a correction, when we hit a correction, Oracle's not going to be safe just because they're boring. Nothing's safe when everyone realizes they spent $1 trillion teaching computers to be confidently wrong. And then there's the risk nobody's pricing in. Commoditization. What if Nvidia decides to vertically integrate and sell AI infrastructure directly? What if AWS builds Oracle-compatible databases and undercuts them by 40%? What if the thing Oracle's betting on, AI infrastructure scarcity, just goes away? Then Oracle's back to being the legacy database company everyone wants to escape. Except this time, they burned billions building data centers no one needs. So yeah, this trade isn't risk-free. It's just less stupid than most of the alternatives. Oracle's not the next Nvidia. It's not going to 10x in a year and make you rich enough to quit your job and move to Portugal. But it's also not going to zero. It's profitable, undervalued relative to hype stocks, and positioned in the one part of AI that has to exist: infrastructure. If the AI boom continues, Oracle prints money. If the AI boom slows, Oracle still has a $200 billion software business that companies legally can't escape. It's the least exciting way to win, which, historically, is the best way to win. So no, Oracle's not sexy. It's not going to inspire TikTok traders or make CNBC scream about the future. But while everyone's betting on the AI revolution, Oracle's just renting out the Revolution server space and charging by the terabyte. That's not visionary. That's just smart. And in a market full of bad ideas priced like good ones, smart and boring might actually be the trade.
But hey, maybe it's time you figured out how to control your money. That's why I made this simple finance budgeting template. Just plug in your income and expenses, and it shows you exactly where your money's going. No confusing apps, no subscriptions, just one clean sheet to finally get your finances together. And here's the best part. It's free. Or if you want to support us, you can pay whatever you want. Start building your first real budget today. Links below.